Hi, this is Shade Ferre with TaxSaleSupport.com. I'm here with Stephen Swenson again, and this is one of our Property Deal of the Week videos where we look at different tax sale properties from states around the country.
Yeah, and today we're going to be talking about California and the California tax deed auctions.
Yeah, California is a tax deed state, which what that means is that property owners are given a redemption period by state law. In California, it's 5 years, but after they are 5 years delinquent with their property taxes, the county can foreclose on the properties and offer them up at auction to recover the money.
Yeah, now the opening bid is going to start at the delinquent taxes, penalties, and fees, and whoever's the high bidder can actually win the property. Now, California will have both on-site and online auctions, with many counties moving to online auctions over the last few years.
Yeah, but they actually don't have over-the-counter property. You know, that's something that they just, they don't offer it. Instead, they'll do resales.
Yeah, exactly. And sometime at those resales, they'll go ahead and discount the opening bid price and start at a lower amount. So that is a chance or an opportunity in California to get properties at a lower price if they end up having one of those resales.
Yeah, and just before we move on here to the sale, we just want to encourage everybody to subscribe and join the channel so that anytime we produce new videos, you'll be notified.
Yeah, I'd love to have you.
So we're looking at Merced County, and this is an auction here that's happening here for the end of February, and it is an online tax deed auction through Bid for Assets.
Yeah, exactly. Now, the first property we're going to look at is a single-family home. Seems to be a decent home, 3-bedroom, 1-bath, about 1,200 square feet.
Yeah, and one of the things that I noticed about it is that the opening bid amount is really low. It's only $3,500, compared to a market value of, it's basically 1% of the value. That's pretty good.
Yeah, and we're pretty close to the auction date, so there's a good chance that this property is actually still going to be available for sale. We can see it was built in 1951. Has an opening bid, like Shade said, of just $3,000, $3,500. Has an assessed value of $179,000. But has a market value or a Zillow value of around $336,000.
Yeah, which really, it's hard to find properties that have that low of a bid to value ratio to start off with. It gives you a lot of room to bid up.
Yeah. Now this next property, overall, it looks like a pretty good deal if you were just looking at the surface.
Yeah, but, in reality, this one's actually, a property that we wanted to display to show the risks of deals like this, because this is one you could easily glance over and not notice or not look into deep enough to realize there's some major problems.
Yeah, in fact, this property is a lot like the first property we looked at. It was built in 1954, same year, 3-bedroom, 2-bath. But one thing we were noticing is the structured value on this property is only $24,000, where the other structured property was valued at over $120,000, $130,000 for just the structure.
Yeah.
And so automatically that's a bit of a red flag. Now, if we're looking into the Zillow value is still high. But when we're looking at the overhead picture, or the overhead image on Google, that's where it starts to give us the better picture of the property.
Yeah, and the county's annual assessment on it is going to be, most accurate. So if they have, if they've changed the number, or if the number has gone down recently, there could very well be reasons for that. And, in this case, if we are looking closer at the photo, you can actually tell that it looks like it was probably a victim of fire damage.
Yeah, exactly. You can see the roof, going into the structure. You can see beams. Obviously, this is a property that's probably going to need to be torn down. So in that kind of scenario, if you were to buy this online without doing that due diligence and sending somebody out there to view the property, you could really be in a situation where you could lose money on this property, because if nobody knows that it's burnt down, it's very likely this property could bid up for, let's say it bids up to half of the market value. Well, if the land's only worth $50,000 or $60,000, and you've paid $100,000 for the property, and now you need to pay another $20,000 or $30,000 just to get it cleaned up, you're going to be in the hole.
Yeah, very easy to lose money on a deal like this. Just because of the unknowns. If you were to send somebody by that, though, it would probably identify itself immediately.
Yeah, that's the reason we talk with our students, we talk with our members, our coaching students. If we're looking at structured property, you cannot judge the online information. We have to get some type of current photo, send somebody out to view the property.
Yeah. Now this one is actually another property that we bring up here to show the potential risks, that are associated with the property. So this is a commercial property. We can see, a piece of land, and they have value for the land, but also value for structure and fixtures there. It has a fairly high value to it.
Yeah, you can see quite a bit of value. I mean, showing a value of $422,000. We look at the land value, and the land value they have listed about $87,000. They show 131 in structure, 131,000 in structure value, and then 191,000 in fixture value, which is something you're not going to see on a lot of tax sale properties. And what those fixtures are, as we start looking into this property more, is we can see all of these, gas.
Old gas pumps. And it looks like there's a lot of them. First off, you can see that there's,
It
several
obviously
rows.
wasn't used as a commercial gas pump. It almost looks like it would have been for a school, or city or something like that, where they came and they got all of their vehicles filled up. Now, one thing about this type of property, if we were just looking at the land itself, it could be an investment worth looking at. It already has a high opening bid, which already, is going to mean you're going to pay a lot for it. But where the real risk comes is, why did they abandon this property? Well, old gas pumps end up leaking, and
oftentimes they have to be dug up and removed.
Gas tanks, I guess I should say.
Yeah, which that's an expensive option if it's deemed that these things have got to be removed, which could very well be the case. That could be what we're seeing there in terms of the value that it's providing for structure, fixtures. This is one of those types of properties that could be a real nightmare.
Yeah, I mean, even though we love the land, we love the location, if it was, and even if it was just what's on top of the property, those pumps, you could remove those fairly easy. But it's what's underneath the cement that worries us. Yeah. And that could be, hundreds of thousands of dollars in cleanup that we don't want to be involved with.
Yeah. And let's see here. The next property that we're looking at is starting at $7,900. And it looks like it has an assessed value of $47,000 and a market of closer to about $80,000.
Yeah, now this is just a building lot, a simple building lot. Like Shade said, valued at assessed value around $47,000. When I was looking at the market value, I couldn't find anything close, at that type of value. I mean, even some properties that weren't as nice were listed around $80,000. I think it could be worth that. One thing that I noticed as well is we're looking at the Google Street View. This was a view from 2021. But we can see right next to the building lot, there's a new construction.
Yeah, there's a... Yeah.
They're building a home right there, which means that they're building a home there. They could build another home here. This is the type of building lot that we like to go after, have our students go after. After we pick this stuff, if there's enough value, we could take it through quiet title. We could get a clean title for it, and then we can sell it as a nice building lot. Maybe even sell it for $80,000 to $100,000.
Yeah, really a highly usable lot. It's very close to the lot right next to it, and at $80,000, really, it's starting off at about 10% of value, and it will probably get less attention than a lot of the other properties. Yeah,
definitely a good lot. We like picking up these type of property. It's pretty safe. You know what it is. Unlike that structured property where it could be burnt down unless we go out there and check. We kind of know what that land is, and if we are purchasing, sight unseen, if we are purchasing, without actually going to the property, that's one of the advantages of land.
Certainly. Now, the properties we've been looking at here are for the Merced County sale in California. This is a tax deed auction that's online through Bid for Assets. And again, you want to make sure that the properties that you're looking at here have use and value before you bid, because some of those properties are quite problematic.
Yeah, for sure. Also, if you're interested in additional training, try checking out our free ebook. You can also attend one of our free webinars. You can go ahead and click the link in the description and download our free ebook.
Yeah, you can also join our membership program, which is $39 a month, which you can cancel anytime, or actually less if you want to do year-long memberships. But it's a combination of providing the tax sale lists, and links to the various sales along with training. So it's basically the best of both worlds.
Yeah, we do weekly webinars each week. We really think it's one of the best values in tax sale education.
Yeah. Hey, thanks for watching to the end. Be sure to hit that thumbs up button.
Yeah, appreciate it.